Refinancing refers to the process of replacing an existing loan with a new loan, typically with better terms. It is commonly done with mortgages, but can also apply to auto loans, student loans, and other types of debt. The primary goals of refinancing include securing a lower interest rate, reducing monthly payments, shortening the loan term, or accessing the equity in the property. Refinancing offers several advantages. These include securing a lower interest rate, reducing monthly payments, shortening the loan term, and accessing the equity in your property. Each of these benefits can significantly impact your financial situation, making refinancing an attractive option for many borrowers. A lower interest rate can significantly reduce the total amount paid over the life of the loan. If the current mortgage rate is lower than the rate on your existing mortgage, refinancing can save you money. This is one of the primary reasons many people choose to refinance their loans. By securing a lower interest rate or extending the loan term, you can reduce your monthly payment, freeing up cash for other expenses. For example, refinancing a 15-year mortgage to a 30-year mortgage can lower monthly payments, providing more financial flexibility. Refinancing to a shorter loan term, such as moving from a 30-year to a 15-year mortgage, can help you pay off your loan faster and save on interest payments. While this may increase your monthly payments, the total interest paid over the life of the loan will be significantly reduced. Cash-out refinancing allows you to tap into the equity in your home for major expenses, such as home renovations, education, or debt consolidation. If your home value has increased, you can refinance to pull out cash based on the new, higher home value, providing you with additional funds. You can switch from an adjustable rate mortgage, ARM, to a fixed rate mortgage to secure stable payments, or vice versa, depending on your financial strategy. For instance, refinancing from an ARM to a fixed rate mortgage provides payment stability if interest rates are rising. While refinancing offers many benefits, it also comes with potential downsides. These include closing costs, extended loan terms, qualification requirements, and market conditions. It's important to weigh these disadvantages against the benefits to determine if refinancing is the right choice for you. Refinancing typically involves closing costs, which can include appraisal fees, application fees, and attorney fees. For example, if closing costs amount to $5,000, you need to consider whether the savings from refinancing justify this expense. Extending the loan term may lower monthly payments, but increase the total interest paid over the life of the loan. For instance, refinancing a 20-year mortgage back to a 30-year mortgage may reduce monthly payments, but increase the total interest paid. Refinancing requires you to qualify based on your credit score, income, and debt-to-income ratio. If your financial situation has worsened, you might not qualify. A lower credit score or higher debt may make it difficult to secure favorable refinancing terms. Changes in market conditions, such as rising interest rates, can impact the potential benefits of refinancing. If interest rates increase after you apply for refinancing, the expected savings might not materialize, affecting the overall benefit of the refinance. If you refinance to a loan with a lower monthly payment that doesn't cover the interest accruing, it can lead to negative amortization, where the loan balance increases over time. Interest-only loans can lead to increased debt if the principal remains unpaid for an extended period. Refinancing can offer significant financial benefits, such as lower interest rates, reduced monthly payments, shorter loan terms, and access to home equity. However, it's important to weigh these benefits against the potential downsides. Always consider your long-term financial goals and consult with a financial advisor to determine if refinancing is the right choice for your situation.